Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about economic data and how that impacts the overall markets with a little market analysis, maybe sprinkle in a little geopolitical fodder. Today might be a little heavy dose of that onto that analysis, and finally talk about some option strategies we could implement into our portfolios based on those assumptions. All right, so without further ado, let's get on with the economic data. What did we get? Yesterday, we got some numbers. Factory orders was the major driver of turning these markets around. That knocked it out of the park. Remember, factory orders is going to be forward-looking. That gives us an insight into what these purchasing managers are seeing as to the demand, right? If they get a lot of orders, purchasing managers are going to ramp up production. That's what we're seeing in the ISM Institute for Supply Management. Today, we're going to get services, so we're going to have to see if that really starts ramping up as well. We've been seeing the manufacturing numbers come in above 50, showing expansion. That's good. Also, today, we're going to be getting out JOLTS job openings. I don't know if that's going to be a major one there. We're going to expect to see JOLTS job openings probably stay in line with where we're expecting it at around 11 million. Then we got the FOMC minutes. A lot of people are waiting for that. I think that we've seen enough data since then and are probably not going to rely on that very much this time as opposed to some of the other times. Something else we're talking about here with the interest rate rising, right? We've been talking about jacking this rate up and that the Fed might likely go over. I think they probably are if they're going to continue at this 75 basis point clip here. I think that we're seeing inflation start to ebb a little bit here. I think companies are trying to hold on to it a little bit with raising prices, calling it a fuel charge. Yeah, those fuel charges are hurting people, but some of the things are with shipping coming across from China. As a matter of fact, there's folks trying to say that to rent a 40 HC, which is a high cube, basically those ones that go on the 40 foot long, okay? Shipping container, that those prices started jacking during this latest Singapore lockdown. Well, I've been involved in shipping from China, and they are not increasing shipping costs right now. As a matter of fact, during this last lockdown, they were able to continue operating. Some folks were in lockdown, but the manufacturing companies had built up enough inventories, they were able to continue loading ships. So we didn't really see the latest round of lockdowns shut down Shanghai like I was expecting there. So continuing to see the price of shipping one of those containers goes down dramatically here. All right. When we're talking about that, before the pandemic, it was about $2,500 to ship a container from China to the United States. During the pandemic, that shot up to $20,000. Now we've seen that come off quite a bit to around $8,000. So not quite back to where we were, but prices for shipping on a 40-foot container has dramatically dropped. And you can think about when you're shipping a container that's 40 foot, everything in there has to absorb those shipping costs. Okay, so when it's at $20,000, you're limited as to where you can load a shipping container. Things with very low margins are probably not going to make that. All right. All right, so with that said, we are also going to be hearing from a few Fed governors, a lot of things coming out of the ECB. I don't know if they're going to have a Fed governor, if you will, or their equivalent to a Fed governor the next time they meet. There's all kinds of folks walking away there, resigning. Another thing to talk about here with crude oil coming off, yesterday's strength in the dollar was probably a big catalyst for some of this dollar or this crude oil weakness, because the data that we got yesterday should have been strong for crude oil. We got factory orders, which should imply there's going to be huge demand for this crude oil. Sorry, I'm not even sharing the screen here. Let me share that. This crude oil chart would be giving it demand, which means that we should see this market move higher. The dollar, for the first time since the 80s, has flipped. I talked about that almost happening, going to parity. A dollar, it could be at any given point right now at parity with the euro. As a matter of fact, I think the high I saw was the dollar was 107, which means that's over what the euro strength is. And with that said, we're raising interest rates here. Keep in mind, the ECB is still negative, I think 50 basis points or negative a half percentage point over there. So a lot of levers and pulleys moving in the markets that we haven't seen in quite some time. The strength in the dollar giving a little bit of weakness here to crude oil, because otherwise it should be rallying off of the demand that we've been seeing. Gold futures, again, correlated to that dollar. That flipped the switch, really caused anything that was dollar denominated, being crude oil, gold. We could even probably look at corn and soybeans. I haven't looked at them, but one would expect that we would see that these markets are starting to, there we go, beans going higher, corn, let's see what they have been doing, because most people have been talking about these commodity prices recently, and they have not been necessarily going higher. As a matter of fact, look at this corn chart, free fall. So these commodity prices, yeah, they are elevated, maybe even a little bit elevated for corn. But the fact of the matter is they have been coming off. That is going to be impacting your food and energy, right? That's what comes into the food and energy data points there. All right, Bitcoin, nothing to see here really. It is finding support there at around that 18,500 area. I was calling that to be closer to the 18,300, 18,250, but we have found support. I would say that we have got even a confirmation of a bottom here. So if you are bullish in Bitcoin, that is what I would be looking for right there. Is we've had some consolidation, a bit of indecision as the price here, but a big sell-off down to the support level. We've got that nice doji, bottoming doji there, confirmation yesterday, finishing quite nicely. So if you are looking at it as a technical trade here, this is indicative of a bottoming pattern. Maybe you'd like to see yesterday's go a little bit further and create that low, but we do have a nice combination here as one would look for a low. So that is the bottom. Anything on a bullish trade, you want to be out on a break below that level there. Now, VIX did come off, and this was off of that snapback yesterday on the factory orders number, dollar strength, a lot of stuff that's happening over there at the ECB, those guys retiring. As a matter of fact, Boris Johnson's they're trying to get him to retire or resign. So a lot of things going on over at Europe with the geopolitical front there, really causing a little bit of turmoil, but not major enough to cause this market to sell off. A lot of people, I believe, are starting to look at this as a bottoming pattern, or at least a bottom, maybe even the low. I'm not quite sure that that's in the cards just yet. We could have one more press to the bottom, but having said that, the opportunity right now with the high volatility would be to sell puts, layering in them in. I'm not saying this is the bottom that we want to sit there and go, okay, it's time to turn our hands around, but we need to be diligent and active. So an opportunity like this would be to sell puts in names that we would want to own there. E-mini S&P is making a nice move. One could say that this pattern yesterday could bring a new top there. Again, when we see those in the middle of moves, especially on real volatile days like yesterday, then it's not as strong of a pattern there. But you can see here we got the overnight when we were looking at the ISMs, stuff like that, in line with expectations, but no revisions really to the upside. Plus, we started hearing this hubbub about ECB, a lot of those folks starting to look to retire. And we saw some weakness there on the economic data, further exacerbating this to the downside when we started seeing that dollar go to parity. We saw the weakness here in the equities coming off. Then factory orders. What was the other thing that we heard yesterday? Oh, that was, China's lifting of the tariffs. That was one of the major catalysts to get this moving higher. We got factory orders and then the tariffs being lifted on China for imports. With that said, those import tariffs are not driving this inflation like the administration wants you to believe. Yes, it does make it a little bit more difficult because we're doing tariffs, they do tariffs. It raises prices across the board. We're trying to make prices somewhat equivalent to made in America, which I can guarantee you is a major difference that most folks don't even comprehend how big of a difference it is. So with that said, those tariffs are trying to make it a little bit more equal. If they remove those tariffs, does it make it more likely that folks will be buying from China on just trying to make a couple of dimes, especially with the inflation where it's at? Before, you might think, all right, I'm not going to deal with the headache of shipping from China only for, a quarter, profit over what I could get here in the United States. A lot easier to deal with U.S. manufacturers and everything else. The burden on your office or your legwork that you would have to do would probably supersede that. But you remove these tariffs, all of a sudden it opens up the floodgates to China again. So I don't know that we necessarily want to see that. I don't think that's been the biggest driver of inflation. You guys have heard me talking. I think the biggest driver of inflation is this right here, crude oil. We need to get crude oil back below 100. We did teeter with that yesterday, but we want to see this solidly below 100. As a matter of fact, I'd like to see it get down to the 60s and 70s for this economy. Get that money flowing, get that velocity of money going. I'm even hearing people skipping meals to pay for gas now, which is quite crazy. All right. So with that said, I don't think the bottom is necessarily in. With that said, I think that it would be an opportune time, though, to start layering in some puts by selling those, get those options flowing. High volatility, you're going to get a very good strike location. Another deviation down, standard deviation down probably, or another 10% move is where you're going to be looking to sell these puts. Now that, after a 20% correction already, is a pretty good place to be looking to add some equities as far as I'm concerned. So that's what I'd be looking to do, only in names that we would be wanting to add to our portfolio with extreme volatility. Stay away from those earnings as well. I give the devil of the details a little bit more justice in my videos on the webinar. So please check those out, Pro Trader Strategies. Don't forget to smash that like button before you go and subscribe. If you can't take that, take it easy.